Most people were taught to follow the rules with money. Save it, spend it, borrow it, pay interest, hope retirement works out. But what if the rules were written by the very system keeping you stuck? Welcome to Cashflow Legendz, the show where we challenge conventional financial thinking, expose the hidden leaks in your cash flow, and help families and business owners build more control, certainty, and legacy. This show is for educational purposes only, not financial, tax, or legal advice. Hosted by Nate, Brandon, and Brock. Money, cash flow, legacy. Break the rules. Build your legend.
Welcome. We are excited to have our guest, Chris Picciurro. Is that how we say it, Chris?
Yeah, I've been called a lot worse, and you did a great job.
We appreciate you helping us be sure we pronounce that well. Very challenging for me with my East Texas twang to get proper pronunciations out. So Nate and I are glad to have you. We've had you on before, but it was about a month before the tax landscape changed dramatically. We're going to let you go into that, but I want to just kind of segue into your heart and history related to taxes. You've been in this industry, in this world for 25 plus years. And here's the thing that I'm drawn to when we talk. You seem to enjoy it. Mm-hmm. You seem to really like educating people on the big bad word of taxes and how to help people defeat taxes in a way that they feel confident in. So, Chris, I know you got a new book out. Nate and I want to be sure that we give that to other people and give access to them so they can find it. But also just tell us what excites you, what you're fired up about right now. What are you looking forward to working on right now?
Well, first of all, thank you guys so much for having me back on. It is truly an honor and a blessing. I enjoyed my first episode, and then a month later, so let's just hope we don't have another tax bill passed next month, because or else you guys are going to look like you're going to have a hairdo like me. So we don't want that to happen. You are right. I love empowering and helping taxpayers legally and ethically reduce the tax they pay in their lifetime. That's what my mission is. And I'm very fortunate to enjoy it. And we have a variety of ways we can help people do that. But I think it all starts between the ears with taxes and understanding that last time I checked, now I'm more of a math guy than English, but tax is not a 4-letter word. So, it's one of those things that if it is going to be our largest lifetime expense, but it doesn't have to be something that happens to you. It could be something that you take control of. And I think especially with your group, it's that same mentality you think when you think about some whole life insurance planning or infinite banking concepts. You're taking control of your banking relationship, right? And you can do the same thing with your taxes. It's behavioral. There's a system, and understanding how the system works. You don't have to be a CPA. You don't have to be an expert, but you do have to make some little changes. And there's just a big, I think, mentality shift that occurs when you realize that you can control the amount of tax you pay based on your behavior. That's number one. And that, again, legal, paying zero tax is not necessarily the goal. It's the least amount of tax in your situation. So those are the things that I love helping people out with. We do have a great community I'll share later on. The tax landscape continues to change, especially with the passing on Independence Day in 2025 of what I like to call OB3. Most people, it's called the One Big Beautiful Bill Act. I'm a big Star Wars fan. If C-3PO and Obi-Wan Kenobi had a baby, it'd be OB3, and now that'd be really a freaky baby. But we call it OB3. It's just we like our acronyms. But realize that when we're talking about tax planning and strategy, that complements tax preparation. And Brandon and Nate, that's one of the things. Probably we've in the Defeating Taxes book, which we'll mention later. There are 10 major myths about taxes. And the main one, one of the main ones is that you can control your tax, and the tax planning and strategy does not replace tax preparation. Tax preparation is not planning and strategy. And a lot of times people don't understand the difference. So the best way to think about this is that anything looking forward tax and financially is planning. Anything looking backward is compliance or tax preparation. And that's that once you realize that, okay, I can change this path. And when we are driving, when we're in that vehicle, I want you to think about this. So if you're kind of struggling with this mentality, and I want you to think about this. When you are driving, what's larger, your rear view mirror or your dashboard? The rear view mirror is tax preparation. Can't change much. It's in behind us, but a dashboard, we have our whole life ahead of us and multiple generations. And if you're looking forward, then you could see the potholes and you can see the challenges. So that's just that mentality. The other thing is, as I said, tax planning and strategy is separate from tax preparation. If you're listening, watching, since you guys are pretty studly as hosts, I'm sure most people watch and don't listen. You might be saying, well, why isn't my CPA? Why isn't my enrolled agent? Why isn't my licensed tax professional talking to me about tax planning and strategy? Because you probably never asked them, right? You probably just assume that having a tax return prepared is planning. Or they might not offer that. Remember, it's a complimentary service. Just like in the medical field, there are people that are in different parts of the field. So not every CPA, not every enrolled agent is a master of tax planning and strategy. And that mentality, that's the first thing. And when we talk about the mentality of tax planning and strategy, we've created in Teaching Tax Flow, which is our tax planning community, that there are 3 laws of tax planning. I'm going to bring it into OB3 because one of the 3 laws of tax planning is tax agencies are your involuntary business partner. So if you don't write your own operating agreement, meaning you don't change your behavior, they're going to pick your tax. If you change your behavior, you pick your tax. And tax laws are written to encourage and discourage behavior. That could be social. That could be economical. That could be environmental. There's a lot of things going on that the tax law is changing. So, and as a result of the 2024 election, a lot of things of new deductions for the 2025 filing season, meaning those returns getting prepared in 26, came about where I think somewhere between 25 and 30 million taxpayers are going to take advantage of those things. Now, if you are listening, walking your jog, exercising, or maybe you're just sitting on the couch with your sweet tea like the show recommends, you might say, oh man, I should have had that deduction. Here's a nice thing. You can amend your tax return for 3 years. So even if your tax return has been prepared and you learned something on today's show, you can go back and amend the return and get that money back if it pertains to you.
Those are great points. And let's kind of think of 3 levels for our listener. We've got the one who's never thought they could control anything about taxes. They just file it. It's a reaction. Then we have those that are on to the reality of maybe there's a way to strategize, and that's different than looking in the rearview mirror and documenting. And then we have those that know the rules of the game, and they're looking to really understand how I can get as much juice out of the squeeze as possible. What do you say, morally and ethically?
Yes, legally and ethically.
Legally and ethically.
Yeah, absolutely. I love how you segment those. And believe it or not, I think the middle segment is the most dangerous one. I'm going to explain why in a minute. But that's really cool that you might be giving us content ideas. So thank you.
Yeah, absolutely.
Our stuff. No, I'm with you. I think that, Brandon, one of the motivations to create the Teaching Tax Flow community is because, quite frankly, I mean, as you said, I've been doing this for 25 years. I've had my own practice. I've been a practice owner for 24 years. So if you're watching, yes, I'm the Doogie Howser of tax, right? I started when I was 10. Now, here's the problem. If you know who Doogie Howser is, you know that I'm lying, right? Because but
you just brought me back to my childhood, and that was a sweet time when Doogie Howser was on for me.
Oh, Doogie. Yeah, Doogie was funny. In that little Mac computer, he might have even had a Commodore 64. I don't even know what computer he had that he was typing up his stuff on.
Yes.
But so one of the reasons, because to be pretty transparent, I mean, I'm blessed to be in the situation that we're in. Most CPAs that own their own firms aren't necessarily, living out of their car, we'll say. So the motivation to build this community is because I truly believe everyone can benefit from tax planning and strategy. And I believe that lower to moderate income households can benefit from tax planning and strategy more than high income households. Maybe not dollar wise. However, an extra $100, $150 in your pocket every month could be a significant portion of their disposable income at that household income level. So household income level and comfortability with tax planning and strategy are not related. It's just many people in that first category that have never been exposed to tax planning and strategy feel that way because they feel like the dollars aren't big enough. We walk through a lot of case studies. I've been really leaning into using storytelling and real cases, like the real situations. Of course, we changed the names and everything. In one of the cases is one of the things we see, kind of like you're saying, is someone that's just starting to get or isn't aware that tax planning strategy is available. Is just that mentality, like, hey, what's my marginal tax rate right now? For someone, and we have a case study that we lean into a lot. Like I said, is that teacher, 25-year-old teacher, just finished college. Maybe they're taking some master's classes, modest income. So they're in a lower tax bracket, marginal tax rate. By the way, marginal tax rate is what you need to be concerned about. Tax brackets lie to you. Marginal tax rate is what you're really paying in tax. And the best analogy is, it's very frustrating, but if you go and buy a ticket to your favorite sports team or your favorite concert, the ticket's going to say X amount of dollars, but you're going to pay a different amount. Or you want to rent an Airbnb, you see that nightly, and then you see all the taxes and service fees and cleaning fees. So marginal tax rate's the real tax you're paying, not the quote unquote bracket you're in. But so this person's in a lower marginal tax rate, and they start their teaching career, and the parents have told them, hey, you need to put money into retirement. What's the first thing that they do? They're so proud they sign up for retirement, but they put money in pre-tax at almost no tax benefit, instead of maybe electing to put it in their Roth account and now let that grow tax-free. So in our system, we use color-coded diagnoses, red, green, purple, gold, to talk about different implementations and strategies. So infinite banking and building your own that war chest is a gold strategy. That's a tax-free income and growth. A Roth contribution is a gold strategy. So if you're in that first bucket of saying, I'm kind of intimidated by tax planning and strategy, I don't know what to do, the first thing you might want to think about is this: Am I creating buckets of assets that are going to grow tax-free for me, not just tax deferred? We're not at TJ Maxx or Burlington Coat Factory in the 90s and putting something on layaway. Tax-free is different than tax deferred.
Yes.
And how can I make expenses that I'm paying right now tax deductible? That could be putting money pre-tax into a health savings account. That could be putting, making sure you're going pre-tax with your health insurance premiums. Like I said, there's a lot of, let's say you have children, putting money pre-tax away in a daycare. You're going to have these expenses no matter what. So why don't you try to make them tax efficient and make them pre-tax instead of after tax? And those are some of the things that we talk about, especially in that very beginning. We've created like 3 buckets of tax planning implementations, because I'm going to probably say this more than once today. Ideas are cheap, implementation's valuable. And in our 3 buckets, we have behavioral tax planning implementations, we have tax advantaged investments, and then we have tax mitigation strategies. Most people start with those behavioral implementations. And like I said, that could be shifting things from one bucket to the other. Like I said, putting money into a 529 plan if you feel inclined. We're going to see in the near future the rollout of the Trump accounts, which are opportunities for people to put money in for children. So there's a lot of interesting things out there just to get started for that first bucket of first kind of tier of taxpayers thinking, I've never done tax planning. And the funny thing is, this is not correlated income. I'm sure you guys have friends or people you go to church with, or people, your kids play sports with. They might run a plumbing business and never done tax planning. We have a client that we started working with last year. Very successful. I'm just going to say they're very financially successful, but it just kind of grew over the last couple of years, and they have about $7 million of profit in their business. Never did tax planning. They're still going to submit their documents to a tax professional that tax professional was competent to prepare a return, but didn't know anything about tax planning and strategy. And we were able to mitigate about $1.3 million of tax for them in 25. So but again, they're going to be millionaires no matter what. $500 of savings for a modest or lower income household is significant.
Chris, and I love that point. We say something similar that ties perfectly on what you're talking about. We don't realize that in all three of those tiers, there are eroding factors on our money that are built into the game, built into the system. Banks, Wall Street, and financial institutions have implemented them or ingrained them into the system where it's almost a silent killer of wealth stability, wealth creation, wealth protection. And so a lot of times we'll say those are sacred dollars. So you give somebody the confidence with their action, and I love what you just said about implementation, because you don't get confident just learning something.
Right.
You get confident learning and practicing something. And that's the same thing with becoming your own banker. It's caught more than taught. So you take a household that frees up $500 over a year's time or 2 years' time, and then they start learning how to reposition those dollars to work for them in environments that benefit them related to taxes. You're talking about changing lives.
Absolutely. One of probably my favorite tax planning case in my now that I've been outed 25 years of experience was a very modest income asset client with less than $1 million of assets, early retirees. And they had a bunch. It was rich dad, poor dad, but it was poor dad, right? They had a bunch of, they had like $400,000 or $500,000 in an IRA. They had their house paid off. They had a small pension and Social Security. So really, they're paying very little tax. They didn't really need money either. And we started making Roth conversions. We're talking 7,000, 8,000 here, 13,000 here over the next 10 years. And that Roth account ended up growing to $350,000 tax-free money. They probably paid, if I had to guess, 20,000 of tax on that total. It's it. Okay. Then what happened? One of their children became very, very ill and unfortunately was in a very bad relationship where that person's spouse was abusive and ended up incarcerated. Terrible situation. So we've got to attack one of our clients' children that's an adult that has their own children with an estranged spouse, with no way to get child support, and on disability, which is very modest. So the planning tool is, well, wait a second. Why don't we take that money in the Roth, and why don't you go buy a house, condo, $150,000 condo. This isn't in a high rent area.
Yeah.
And have your child live in that house. We're gonna call it a loan. We're gonna do a self-canceling installment note to avoid gift tax. And you now have a place for your child to stay that's safe, that your grandchildren can stay in, that's safe, stay in the same school district, give them some stability. Again, not everyone can do that. However, that's tax planning. Because if that wasn't the case, if that money was in their IRA and they wanted to still do the $150,000, it would have cost them $60,000 of tax because they're taking it out at once. Or they did not want to take a mortgage out. They worked their whole life not to have a mortgage payment or not. So I know so those are the things that can happen. Brandon, you triggered me on that. Just little things. They're bricks. They're momentum. Practice makes habits, and learning is important. Gosh, I had a client. They're getting into real estate, and they're like, "Well, what should we do?" I said, "You know what you should do? Just buy your first house. Try to flip your first house. Look, you might lose money, but don't go to some $30,000, $40,000 weekend class to learn how to do something. You could lose $20,000 yourself and learn a lot more, or you might make money. Who knows?"
One of the things that Nelson Nash, the creator of the infinite banking concept, talked about is, and we try to emphasize to people, is it's all about how you think. And we nerd out on whole life insurance, you nerd out on taxes. I think we could both safely say a lot of our job is spent around just clearing up misunderstandings around those subjects. And as Nelson liked to quote, once you understand the problem, then you will know what to do. And as you kind of said earlier, the tax code is designed to incentivize certain behaviors. And there's this sort of the stigma around taxes in general when it comes to tax planning. I believe a lot of people are like, oh, you're just skirting the system. No, we're participating in the way the rules have been laid out. And understanding those rules means that we can participate in behaviors that give us a better benefit than somebody else who says, oh, you're just skirting the system or something like that. I would love to know from your perspective, based off of this new tax bill, what's probably the biggest thing that most people just don't understand about the new tax bill right now?
Right. No, thank you. And I love that analogy. The system is the IRS isn't the bad guy. The IRS is just part of the system. They're a collection agency. And tax laws are written to encourage and discourage certain behavior. So what are some of the things that are going to affect most taxpayers? So as we know, we had that election of 2024, 4 new temporary deductions. These are going to be deductions for the next 4 years. We'll see if they get renewed, came into play. And they are all reported on a Schedule 1A. So I don't want to get too technical, but if you when you get home and if you want to look at your tax return, you think any of these speak to you, see if you filed a Schedule 1A. And if you didn't and you're entitled to it, like I said, you can go amend your tax return. But the 4 temporary deductions are going to be, first one, no tax on tips. Now, here's the challenge. You could scroll TikTok, Instagram. One of the things I gave up about 10 years ago was watching the news, but you could watch the news and you're going to say no tax on tips. And what did that do? It definitely encouraged a lot of votes, right? Service industry people and that sort of stuff. For the vast majority of people that are tipped, they're not going to pay tax on it. There are income thresholds on each of the 4 deductions that I'm talking about, meaning if you go over that threshold as far as your income, you begin to get phased out of the full deduction or you lose it completely. But we're talking hundreds of thousands of dollars of income. So the vast majority of people will not be over this. So no tax on tips is one of the 4. There are some, I'm not going to dive into all the rules because we don't want anyone, falling asleep, but just be aware of that. No tax on overtime. Geez, what was that? Well, there's a lot of votes in Michigan, in Ohio, in Pennsylvania, in the Rust Belt. And just like there's a lot of, there are a lot of votes in Florida, Nevada, here where I live in Nashville, and I don't think Tennessee's in that much jeopardy of which way they're going to swing for any of the elections. But you see what I'm saying is so you have no tax on overtime. So overtime pay could be, you can get a deduction for the portion of your pay that's overtime. The third one is going to be no tax on new vehicle interest. Now, personally, I don't like buying new cars and I don't like having a vehicle note. That's just a personal decision. I'm thrifty when it comes to vehicles. I'm not a car guy. However, if you bought a new vehicle and financed it, you can deduct up to $10,000 of the interest if you qualify. Who did that help out? Our friends in Detroit. It has to be a vehicle final assembled in the United States. The banks, the credit unions, the captive finance companies for the automobile industry companies. The fourth one, so during the election, it was bandied about that Social Security was not going to be taxed. Well, you can't do that. It's a completely separate system. So the new mature, I call it the mature aged person, but senior deduction for anyone 65 or older, up to $6,000 each, is now in play. So those are 4 new deductions that can come off your federal taxable income just here in 2020 for the 25 filing season for the next 4 years. And so give you an example of tax planning, right? Let's say you have a couple people that are 66. They started taking they're on Medicare, but they haven't taken their required minimum distributions yet. And maybe they're going to start their Social Security. We have an opportunity for each of them to take $6,000 a year out of their IRA, maybe even convert it to a Roth for the next 4 years. That's $48,000 of income we could take out tax-free with the right planning. And that's a lot of money, so that's where you have to think. You guys are talking about looking at those rules. Okay, what are the rules telling me? And then how can I use the rules? Just like in football, you have to have a certain amount of people on the line. Only certain players could be in motion. You have a certain amount of time to call your play, but you can run any play that you want unless there's unless you get penalized or it's an illegal formation. So that's how we have to think about how we're getting our affairs in order. So those 4 temporary deductions. Now I was thinking about, I've done some teaching and that sort of stuff for presentations. And I was always thinking, like, how can I create a case study where someone would get all 4 of those deductions? So I had one. It might be a little far-fetched, but we had one of Santa's helpers help out at the mall during Christmas season. And that helper, their spouse got sick of them sitting around the house. So they're over 65. So they go work. And because it's a crazy time at the mall, they have overtime. They get some tips. Santa gives some of the elves tips from the tip jar. And the 4th thing is they made some money and they needed a new car. So they bought a new car. So I don't know. That's the only one I can come up with where we can get all 4 of them. But no, seriousness, look at those 4. Those 4 are their new deductions on Schedule 1A.
What, Chris, what would you say? So Nate and I's typical ideal prospect or client that comes into our ecosystem, the first thing that defines if they're an ideal prospect to work with is their thinking, which we've talked about that several times.
Yeah.
Because if you believe it's as good as it's going to get, and you believe in things like death and taxes are the only things that, we're going to deal with, which is kind of ironic. I was thinking earlier, you built your career around taxes and we built ours around death. And the reality is our whole teaching motto is to prove that that's a misconception.
Right.
But how many
times?
It
is ironic.
Yeah, it is. How many times have I sat in a teacher's lounge in my previous lifetime as a coach and a teacher and heard those things? And so the first reality is my current thinking getting me to where I want to go? And do I even know where I want to go? Because all the things you just described are about choices.
Right. Exactly. In thinking is, if you think about like, let's say, I live in Franklin, Tennessee, just south of Nashville. I know you live in East Texas, and my wife has family in Texas. And if I say I'm going to drive to Dallas, or, they're in Galveston, and I make a wrong turn, and 5 minutes later, other than my wife giving me the look of death, I realize, all right, I made the wrong turn. Let me get back on course. Kind of like that's your mentality. Then no big deal. I'm back on the right course. But if I go hours of going down the wrong path, meaning your mentality can't change, and then you're so far away from being on the right course, it's hard to get back, and that's a good point. That second tier taxpayer, I feel, is the most dangerous. They want to take some actions. They realize that tax planning is important, but a lot of times I have to talk to these folks about ideas are cheap and implementation's valuable. And you have to have a process for tax planning, because a lot of times they're just scrolling and thinking that something that has nothing to do with them applies to them. Literally, I was today playing pickleball. I got to mention it in every episode with a bunch of guys.
I was wondering when it was going to happen.
I try not to mention it, but one of my good friends, very successful person, I'm not going to get into the details. It's like, I'm an S corp, and even him, as successful as he was, I said, look, it might work out for you, but out of the 10 people I talk to that think an S corp makes sense for them, 2 of them doesn't actually make sense for a variety of reasons.
Yep.
That's just the way it is. Or, I think that, there's a lot of things that can happen, right? I mean, so those people are analysis, paralysis by analysis, because they don't have a guiding light. You're almost better off making no decision than making bad decisions, if that makes sense. And those are the people we kind of wrangle in a little bit and say, look, you've got to build that team of people to help you implement. I mean, you guys are in such a similar industry. Like, it's hard. The right mentality is someone that doesn't look at taxes as a commodity. Taxes are a relationship, just like life insurance. Your policies are, if you think about them as a commodity, then you're thinking about it the wrong way. You got to think about it as a plane. You got to think about, and that's where you guys come in and help people out. Same with me. The third group of people, those are the people that we work with at least for me, on my day-to-day basis in our private CPA firm.
Yeah.
They have resources. They, even if they don't have a ton of resources, financially, they understand the value of planning and strategy, and they do it. And they trust that, like in our practice, we have 89 tax planning implementations that we feel are legal and ethical right now. I'm doing due diligence on 14 of them as we speak, that probably half of them will be implementing later this year. I had a client ask me for this entire spreadsheet of all of the and I wasn't going to give it to him. And I said, you know what? Go for it. You want, look, check it out. And you try to, because there's too many. So it doesn't mean that, I'm sure like with a life insurance policy, you do not need every rider. You do not need every bell and whistle. You have to look at your family structure, your situation, and maybe pick a couple that make sense. Because you don't, that second bucket of people get FOMO, and those are really hard to deal with sometimes, to be honest. Yeah.
I don't know. I want to touch on something you just said, if it might have been missed. And the only reason Nate and I know this, because we have the privilege of being on tax strategy conversations often.
Right.
You just said there's 89 and you were doing your due diligence on 14. And it reminds me of the greatest shoe salesman ever in California, who realized if he quit giving 3 choices at once and only give 2, he sold more shoes.
Right.
That also works in how we decide what we're picking.
Mm-hmm.
And so you may funnel someone down in your ecosystem to go, these 3, 4, 5, they would all work.
Right.
But here's the 2 we think would work best because of our experience, our knowledge, our research, our due diligence.
Mm-hmm.
Which one do you like better? Well, I like that third one. Let's take this one off the table then.
Right.
Because 3 or more is confusion.
It's a lot of confusion. And so we've tried to create some content, like 3 to 5 minute videos on educating people. And for us, a lot of the slimming down of implementations is liquidity. It's amazing how many people make a ton of money and don't have any liquidity to deploy, and then they're not able to pick their tax. So a lot of it comes down to liquidity, and they might only be able to do some of the behavioral tax planning implementation. So absolutely, you've got, it could be analysis by paralysis. I do want to mention one more thing on OB3, just so I don't forget. The SALT tax deduction, state and local income tax deduction, went from a max of $10,000 to a max of $40,000. And so for us, in these beautiful states that don't have an income tax, that might not affect us too much. But for those highly taxed states, Texas has a pretty significant property tax. Yeah. So that could be, you could easily, and that SALT tax deduction includes property tax and also sales tax. So if you did buy that new vehicle, new piece of equipment, a boat, you've got to factor all that in. So I could tell you from the tax professional side of things, getting information is the hardest part of our job. And we have so many parallels in our businesses. Like you want to get an application in for a potential client, and they might, just getting their information is important, and they might not feel like it's important, but you'd rather know maybe it's a medical issue, maybe there's something somewhere that could not get them the best result possible, that you want to know up front. So that's one of the challenges.
You brought something to my mind. Nate and I were just at a recent event, and we'll tidy up and kind of connect the dots here to be sure that people know where to find you and know how to reach out and give your new book some love. But one of our concepts that we talk about a lot is everybody has a financial junk drawer.
Oh.
And getting it all on the table. But it's interesting to me, hardly ever is taxes discussed as getting on the table, but it's one of the most costly things that impact liquidity for any household. Because that's an invisible drag on the flow of money in their life that is disappearing, that they don't know how to keep. So, we have so many parallels. I would even go as far as to say complementary opportunities to go, hey, Chris is an expert in taxes. Nate and Brandon are an expert in whole life. This person's an expert in this. And the only way that we could logically and consciously make a sound decision is to be aware of everything on the table.
We talk about that a lot. Build your personal board of directors. And that's something you need to do.
That's good.
Yeah. And it's taxes are very confusing. I'm sure, and I guess the parallel would be, I'm sure when people sometimes focus on premium and not on policy and
not on process and how you're going
Yes.
to, yep.
So in my world, people focus on, they don't realize that in different types of income is taxed at different rates. I just did a quick case study, a quick reel where we did $100,000 self-employment income, long-term capital gain, and interest income. 3 completely different, but people don't realize that. So how do we arrange things to get people the best result possible? And it's just through planning, and that's about it. Now, planning isn't like sexy all the time, and it's not, but again, it's it's just thinking about having, because taxes, when you pay tax, it could be like I was thinking about to my case, like someone has a catastrophic life event and they've got to yank a bunch of money out of an account that's not very tax efficient. That's not good.
It's a double gut punch because of lack of planning. So this has jumped into my mind. Most people file taxes.
Mm-hmm.
Very few plan them.
Right.
And so what you're basically saying is, and we like to give actionable steps. So anybody listening or watching, what's the one thing that you could do if you've never thought about planning tax strategy, no matter which tier you're in, high income earner, or you're figuring it out, but you're not sure. And you're like, this is not relevant to me. What's the one action step somebody could take in any of those tiers, Chris, that you would go, this will bring value for the next step?
Absolutely. I'm going to say 1, look at your tax return and figure out what your marginal tax rate is, or ask your tax professional. The other thing is, make a quick list of your expenses that you're not getting a tax deduction for.
It's good.
It could be, I'm paying rent. Well, maybe it's time to buy a home, right? That might be the next season of life for you. I'm paying my kids' tuition, and like my kids are in high school. I'm paying the tuition, and they're legitimately helping me out with my business. Maybe we should put them on payroll and have them pay their own tuition. So these are just little things. It's going to be different for everybody. So make a list of all of your expenses that you are not getting a tax deduction for, and figure out if you can structure things to make them pre-tax or tax efficient. And that could, like I said, that could be something as easy as prescriptions and daycare. I have one final analogy that just happened to me. I've been wanting to go to the Olympics my entire life, but I've never gone. And obviously the Olympics are in Los Angeles in 2028, the Summer Olympics. And I'm like, okay, well, in 2028, we'll just go, but tickets are going to be crazy. So I ended up going on to LA 28. I don't even remember the website, and going in a lottery to buy tickets. And I actually just got emailed yesterday that I am selected to buy up to 12 tickets.
Wait.
I'm going to get 12 tickets. I'm going to pick the events that are going to sell out, because I could always go probably go see fencing, But what did I do? I planned. That's tax plan. Was I 2 steps ahead of everyone else? Absolutely. Did I do anything illegal? No. I just looked at the system and used the system to get me the best result possible. And that's the mentality they got to take with the taxes too.
I want to ask one other question, switch gears just a little bit, but you mentioned parallels earlier in our businesses, which brought up this thought. Collaboration is something that is becoming more and more common in our community and what we do. Do you find yourself collaborating with other tax professionals?
Oh, that's an awesome question, Nate. Thank you. I literally, on my whiteboard, I've had it written for many years: collaboration over competition. I'm glad you brought that up. And this is not my statistic. This is the American Institute of CPAs 2 years ago did a survey. 75% of CPAs are going to retire or pass away in the next 15 years.
Wow.
We have a retirement cliff, that's called. We have a pipeline issue. We have about 40% less people even sitting for the CPA exam than 20 years ago. So that cocktail means a lot less professionals. We do need to band together. And, one of my passion projects, a little over 2 years ago, I started a peer-to-peer mastermind group for tax professionals. And it's been awesome. So yeah, absolutely. Tax professionals should collaborate, and we all do different things. We all have different clients that we'd like to help. And I think now we're more apt to to be okay saying, hey, I don't, like, if I had a client that was, I had a client that was a timber farm. Actually, he was a big real estate investor. His wife wanted to retire and he retired, which is fine. And she wanted to buy a timber farm. And I had to refer him to someone else at that point. Because, you can definitely learn new things, but being a timber farmer, there's CPAs that have their whole practice is timber farming. So, collaboration is important.
Chris, I think we could probably have you on once a month and always have something to talk about related to
thanks.
taxes or collaboration or game planning. I want to be sure, where can people find you that you like to send them? And tell us a little bit about your book and where we can find that, because I know I'm buying me a copy so I can read it as soon as possible.
Well, thank you. I appreciate it. Yes, we have a new book, right? My first book here, Defeating Taxes. If you go to defeatingtaxes.com, that's going to bring you in our community. It's going to take you to our YouTube channel. It's going to give you a link to either purchase the book as a download, as a paperback, or I know I don't have the best voice in the world, but I did put it on Audible. I was so close to just hiring that out, but I just felt like it wasn't very authentic. So
An author does the voice on an Audible book.
I figured I had to. I'm from Detroit originally, so I speak fast. It's under 4 hours. But it also takes you to our private Facebook community called Defeating Taxes. So defeatingtaxes.com is going to be the best spot to go. Or ChrisPicciurro.com is my personal website. But again, Defeating Taxes is our community. And I think that's a great place to start. I could tell you that our YouTube channel and the Facebook group are complimentary resources that people have really enjoyed. We just launched 3 YouTube courses. One's called Teaching Tax Flow 101 for that first tier person you were talking about. And then we have a course, and these are like 45 minutes complimentary. One for real estate investors, one for entrepreneurs, where we're walking through stuff like S-Corp elections or cost segregation studies and that sort of stuff. So yeah, I felt, so that's the best place to start. And we'd love to have you, anyone who's watching or listening, as part of our community.
It's awesome. A parting line for everybody: the tax system isn't punishment, it's an incentive system. And we get to decide how we want to think about how we think related to these topics. And we get and find what we're looking for. Have a blessed one.
Thanks for listening to Cashflow Legendz. If this episode helped you think differently, subscribe to the show and share it with someone who needs to hear it. And when you're ready to start building your own cash flow system, schedule a clarity call with Nate using the link in the description. Money, cash flow, legacy, break the rules. Build your legend.